Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 17th of September. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Microsoft, OpenAI, Nvidia and others commit to investing tens of billions of pounds in Britain during Donald Trump's state visit.
The US president will have an audience with the King as the UK government shelves talks of eliminating steel tariffs.
Plus, is 50 the new 25? Traders boost bets on a half-point interest rate cut from the Federal Reserve by the end of the year.
Let's start with a roundup of our top stories.
Our top stories. Some of the world's largest technology firms have announced tens of billions of pounds of UK investment to coincide with US President Donald Trump's state visit. Microsoft, Nvidia and Google are among the companies who say they will spend billions building out Britain's AI infrastructure. In a video message, Microsoft CEO Satya Nadella compared the moment to the Industrial Revolution.
We're doubling down on our investment in the UK. We will invest more than $30 billion over 4 years to build on the foundation we have already laid here, our largest investment in the country ever.
Satya Nadella is joining Trump on the visit alongside several other leading tech CEOs, including Nvidia's Jensen Huang and OpenAI's Sam Altman.
But the visit may not achieve all of Prime Minister Keir Starmer's aims. Bloomberg has learnt that the UK has quietly shelved its talks with the US on eliminating tariffs on British steel. It's a blow to the industry, which has been waiting for months for the removal of the 25% levy, which had been agreed in earlier talks. The strategic decision comes even as President Trump signalled that he was open to some concessions on trade as he boarded Air Force One for the trip.
They say Windsor Castle is the ultimate, right? So it's going to be nice. But basically, I'm there also on trade. They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. They'd like to see if they could get a little bit better deal. So we'll talk to them.
Those comments from the US president came as sources told Bloomberg that negotiators from the UK will continue talks with their US peers to axe steel tariffs over time.
While much of the focus of the US president's visit to the UK is on the economic benefits for Britain, the British drug maker GSK has also announced plans to invest $30 billion in America over the next 5 years. The US accounts for about 50% of the company's revenue. Prime Minister Keir Starmer has lent his support to GSK's investment, highlighting it as an example of UK-US collaboration. The move follows similar announcements by other pharmaceutical companies after Trump threatened tariffs on imported drugs and complained about high prices paid by Americans.
Well, the King and Queen are preparing for a full day, hosting Donald and Melania Trump on their state visit at Windsor Castle. The US president has been invited to inspect the Guard of Honour with the King. They'll also view a ceremonial drill that concludes with a military jet fly past. Kim Darroch, one of the UK's former ambassadors to the United States, says this kind of welcome means a lot to the president.
Trump is fascinated by the royal family. When he came over for his first state visit, he brought his whole family, which is like saying to them, look, I've made it.
But the pageantry that Darroch mentions might be overshadowed by the ongoing controversy around public figures with ties to paedophile Jeffrey Epstein. Last week, Keir Starmer fired his ambassador to the US, Peter Mandelson, over the issue, which has also dogged President Trump.
The euro hit its strongest level in 4 years yesterday as traders prepare for a Federal Reserve interest rate cut today. The currency rose as the Bloomberg dollar spot index edged closer to this year's lows. Officials are expected to lower borrowing costs for the first time in 2025, with a quarter-point reduction seen as the most likely decision. Alicia Levine is head of investment strategy and equities at BNY Mellon Wealth Management.
The Fed's going to cut. It looks perhaps more justified than it did 2 or 3 months ago when this conversation started in earnest. And look, the market's already priced in something like 140 basis points into the end of next year. So it's already in the market.
BNY's Alicia Levine speaking there as the cooling labour market in the US leads some traders to increase their bets that a souring economic outlook could prompt at least 1 half-point interest rate cut across this year's remaining policy meetings.
Now to other stories. TikTok's US operations would be bought by a consortium of US companies under a deal to be discussed between President Trump and China's Xi Jinping. The framework agreement involves a US-based version of the app, backed by firms including Oracle, private equity firm Silver Lake, and venture capital company Andreessen. US Trade Representative Jameson Greer says that the deal represents a step forward.
The TikTok saga has gone on for a long time. Toward the end of his first term, President Trump set about to solve it. Over the course of the Biden administration, they grappled with this issue but could not solve it. But as of yesterday, we believe that President Trump has, in fact, resolved this issue.
US Trade Representative Jameson Greer there speaking to Fox News. Under an initial agreement, ByteDance's stake in TikTok would fall below 20% in order to satisfy a 2024 US law that requires the Beijing-based company to divest. The deal values TikTok's US operations at about $35 to $40 billion.
The cyber attack that brought Jaguar Land Rover's plants to a standstill earlier this month is forcing some European parts makers to pause or scale back their own production. Bloomberg's Michal Kubala has more.
It's been over 2 weeks since the car maker announced the hack had severely disrupted its operations. That's also meant halting production at companies like Eberspacher, a German exhaust maker. It's put around 30 staff at its plant in Slovakia on holiday or on short-time work with reduced pay. Others have been hit too. The CEO of quality control firm Holland warned nervousness is growing among contractors exposed to Jaguar Land Rover. JLR says operations won't restart until at least September 24th, and has warned some data may have been compromised. In Brussels, Michal Kubala, Bloomberg Radio.
And those are your top stories. On the markets, the MSCI Irish Pacific Index is trading slightly higher this morning ahead of the Federal Reserve interest rate decision. S&P mini futures are a little bit weaker today. The 10-year Treasury yield up a basis point at 4.02%. The euro a touch weaker against the dollar after hitting that 4-year high yesterday, but still above 118 at 118.58 as we're looking at European stock futures pointing a little higher, up 0.3 for Euro Stoxx 50 futures.
Well, in a moment, we're going to bring you more on how Keir Starmer and the UK government are going to try to play Donald Trump's state visit to the UK. And we'll also look ahead to what markets are expecting from the Federal Reserve decision also later today. Another story that's caught our eye, though, of course, is about the strategies, the tactics that big CEOs have been using to charm Donald Trump, and maybe something of a lesson for the Prime Minister, Keir Starmer.
Yeah, indeed. So Bloomberg's West Kosova has been writing about the meetings that Donald Trump has had with some big CEOs and how it's unusual that, of course, we get so much of an insight into what a president is thinking because Donald Trump uses social media so much, but also has so many interactions with journalists where he makes quite, I suppose, heartfelt comments, it appears, about how he feels about certain subjects. So this gives people who are trying to, I suppose, win over Donald Trump plenty of material to work with. We know that he loves prizes, for example. So we had Apple CEO Tim Cook making a special trophy for Trump when he came to the White House for talks over chip tariffs. So that helped his company potentially escape damaging levies as well, alongside the announcement of a lot of money for US manufacturing too. Now, as Wes points out, there's nothing inherently wrong with the government deciding to back certain industries or companies. Think about France and nuclear power. But he does speak to the Harvard Business School professor Rebecca Henderson, who says these deals are often made in haste. She doesn't believe they'll yield significant benefits to the US economy. And for company bosses, there are cautionary tales in here as well. Just because you've won over Donald Trump once doesn't mean you're going to stay in his favour over the long term. Look at Hyundai investing billions of dollars in US manufacturers, but Trump's immigration enforcers still raided a Hyundai LG electric vehicle battery plant under construction in Georgia, arresting hundreds of foreign engineers working there as well.
Yeah, no, I get your point about the stream of consciousness that we get from the US president, and that does give people lots of insights. And obviously the gold-plated iPhone that Tim Cook handed over in this kind of great show in the Oval Office. I mean, I'm just wondering, what is the UK going to do? I mean, all of the pageantry, you're going to see it all at Windsor Castle, also even at Chequers, I suspect, which is the country residence of the Prime Minister, where the kind of political bit of this visit is going to take place. I mean, what do you think the gifts are going to be? Again, is it going to be tartan, something along Scottish lines?
Shortbread biscuits.
Yeah, but I mean, maybe gold-plated ones. I don't know. I mean, look, some flattery has clearly worked for the UK, but what does it mean in terms of economic growth and the other things Britain really wants? I mean, it's very tricky. It's a hugely important relationship.
Well, indeed, let's bring in Bloomberg opinion columnist Rosa Prince for more on this as well. Rosa, you'll be watching all the details of this very closely too. I wonder if we think about it in the context of we're starting this trip with a raft of announcements of really big amounts of money talked about being invested in the UK as well. From Keir Starmer's point of view, is this setting him up for a very successful trip with Donald Trump?
Well, he's definitely hoping so. We did see some really big announcements coming over in the last few days. As you say, about £30 billion of investment, particularly in the tech space. Some talk that investment in AI could boost the British economy by as much as 10%. Now, that would be really great for a Prime Minister who has found the country in something of an economic doom loop and has said quite a few times that he's hoping to grow our way out of this trouble. So all good news on that front.
Yeah, but then early on, the idea of getting steel tariffs wound back or lowered, that has been put aside. I mean, the steel industry is not that significant for the UK. Is that important, or is it just a signal that there are a lot of difficult issues still on the table?
It's not that big in terms of its kind of economic clout, but it's quite a sort of totemic industry for Britain, particularly because the government has invested and really sort of taken over some of Britain's steels. Now, we're told that the sort of reduction to zero tariffs that Britain had hoped for, that had been talked about a few months ago, isn't going to happen. And the main reason for that was that it didn't take into account the kind of quota system that was involved in this. So it would have been it would have meant that some companies were spared tariffs while others were going to get the full 50% whack. So the deal is now that Britain's going to get 25% relief, which is better than most of the world. So a small win. I think Britain had hoped for more. One good thing about Donald Trump is, as you've been saying, he's really unpredictable. He's really mercurial. As he got on the plane last night, he actually brought up tariffs, which I think the negotiators hadn't expected. He said, maybe we can get them a better deal. So I think Britain will be hoping perhaps they can reopen something that they had been told by their counterparts in the States wasn't going to happen.
Okay, Rosa Prince, Bloomberg opinion columnist, thank you very much for joining us. You can read more from Rosa, by the way, at bloomberg.com/opinion. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Okay, so that's one major event that's preoccupying people in Britain. But of course, today's Federal Reserve decision is expected to dominate markets and will likely see the first interest rate cut of the year, as recent data has highlighted a weakening labour market in America. Joining us now, our executive editor for Asia Markets, Paul Dobson. Paul, good morning. Markets fully pricing in 25 basis points cut. The likelihood of a surprise from Powell today. What's your view on the 50 basis point debate?
My view, and the market's view, and the economist's view, is that that's unlikely to happen. Not many people would expect it, given what we've heard from the Fed policymakers. We will have Myron joining the meeting, and he's likely to push for something more aggressive. And a couple of those other committee members may dissent and express a desire to get 50. But the likelihood of the majority being persuaded that that's what's needed right now seems pretty low, given the data that we've seen. Yes, there's a cooling of the labour market, but yes, there's also still those concerns about sticky inflation. So the Fed won't want to act too fast, probably, move in a more moderate way if it possibly can.
We'll talk about the economic projections next, Paul. What will markets be watching out for in the dots, perhaps a looming question mark?
Yeah, I think there's a few things to pick through there. In terms of the economic projections themselves, it seems, it looks based on the analysis from Bloomberg Economics, that they'd be likely to leave both the outlook for inflation and for growth more or less where it was at the last meeting. So not a great deal of change in that, but there is going to be that shift toward a signal of more cuts, most likely. People will be paying attention to the dots to see whether there's an indication that there would be just one more cut this year or a second cut starting to come into some of the forecasts. Likewise, how many will we see for next year and how soon? Could there be some more into the first quarter to see sort of how aggressive the Fed is likely to be in that path based on the views of the current members, which is a little bit in flux. Of course, some of the members will be dropping off over the next year. And the other thing that I thought was really interesting that Bloomberg Economics is talking about is the possibility that a couple of the dots may even come in higher for the rest of this year than where the Fed target will be after a likely cut. A sort of silent dissent against that idea that the Fed should be cutting right now.
Interesting. How do you think that markets are going to react? I mean, the positioning at the moment, the euro hitting a 4-year high, weakening of the dollar, gold also close to another record.
It's been records. If you look at the equities market, if you look at gold, if you look at incredibly tight credit spreads as well. So there's a lot baked in, the optimism that the Fed is going to be beginning a cutting cycle. It's likely probably the Fed Chair Powell will, in his press conference, moderate that somewhat. I think he will probably mention the risks on the inflation side as well as the slowing labour data and try to tread that line quite carefully. But the market is probably on the lookout for that already. And what it really cares about is, are there more cuts coming? And the answer seems to be yes. And in which case, you might get a buy the rumour, sell the facts kind of a move. But the trajectory, I think what you identified there, Caroline, with the dollar weakening against the euro, weakening right across the board, is the one thing that seems most certain the traders are focusing on through the rest of this year.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.